Part 2 of the 8-part series. In today's video, we're going to cover the second tool that you should never use in your technical analysis to solely rely on in order to make a profit. Now, that one is support and resistance. As many of you know, break and retest, ceiling, floor, support, resistance, all that good stuff. This is definitely one that I know a lot, because it's something that I used in my trading for over a year and a half, almost 2 years. And I solely relied on it, and I thought it was the only way to make a profit, and it was the best way because that's just how the markets move. But sadly, it's not. And I know this is probably the most used technical analysis in basically any trader's arsenal because it's just the most used. So today, we're going to cover exactly what it is if you've never heard of it. If you have, because I bet most of you have, we're going to also cover why it doesn't work. So support and resistance basically is when a resistance is a ceiling. So think of kind of like Mario Kart, when you're, or not Mario Kart, but Super Mario's or Mario or whatever. When Mario jumps and hits that brick with his head, he can't go any higher, right? Because the brick stops him. It's the same thing with the market. The market is coming up and out of nowhere, it just stops, right? So this is our point of a ceiling, a resistance, whatever you decide to call it, a reversal. This, for now, we're just going to call support and resistance. And what a lot of traders will do is that when they see support and resistance, they will see that as an area that's very important to look at, because what was once a ceiling or resistance, if it is broken, it will then become a floor or support. And that's, exactly what happened right here. Now, right, so the market comes up, it respects it, but if it is broken, then it can come and retest and shoot up, which this is a perfect example of that. Now, one reason, just like if you haven't seen part 1, I would recommend you guys go check that because that was on trend lines. It's the same thing with trend lines and support and resistance. It's too subjective. And what I mean by that is there are way too many areas where you can find support and resistance and really psych yourself out. And here's an amazing idea, or an amazing example. So right here, we have a resistance and a support. And if you were to take this trade, you would have profited quite a bit. This was a perfect trade, right? Nothing went wrong. This is picture perfect, exactly what we wanted, right? We hit a resistance, it breaks through, we retest, boom, buy here, profit here. Easier said than done. And a big reason for that is because it's subjective. When you're looking at the chart like this, it's easy to tell where and when a support and a resistance is going to be met because of one solid reason. It's already happened, and so you're confident that this is a good resistance level because it's already proven that it is. Now, what I mean by that is, let's say we go into a real live example. Right here, market did exactly the same thing. How do we actually know that the market can do this? Because a lot of people will say, okay, here's a good resistance, we're going to take this. Next time the market comes here, we're going to sell. But if it breaks, we're going to buy. So here's what I mean by that example. Market comes here, it rejects. So now what a lot of people are thinking, if it comes back in this area, we're looking to sell because it's going to reject again and reject again and reject again. Or another example could be, if it breaks, we're going to look for a retest because it's already shown us that it is a strong zone. So that means it has to respect and go up. Now, why can't the market just do this and then this and then this and then this? Because it usually does things like that. Or if it does break, why can't it just go like that? Because you'll see that a lot. And now let me show you some live examples of that, because people are going to look at this. Forex gurus are going to teach this to you, and they're going to show you support and resistance is the best way to trade because the market works like this. Now, let's say for this example, why can't we zoom in, say this is a very good resistance, right? We have a hit, another hit, another hit. The market breaks, and then it just spikes below all these lows, probably where your stop loss would be, because you as a retail trader, as soon as this breaks, you're entering on a doji or an engulfing candle or on smaller time frames, and your stop loss is more often than not right below those lows. And if you were to take that trade, you would have gotten stopped out, and then it goes. Now let's say this example. We have some really good support here, right? I mean, look at the market. It's respecting once, twice, another one, a bunch of dojis. This is a really good floor. It's a really good support. So we're going to buy, and our stop loss is going to go right below the low, because obviously the market is respecting this area because it hasn't broken through. It's losing momentum, and then you get stopped out and the market goes. So are you guys starting to see what I mean by it's a little too objective? And if it were in real time, it's so difficult to really understand where the market's going to go. Because here's another fantastic example. So let's take this for example. I bet you a lot of traders were looking at this, and market came up here, it reversed, it tapped again, and then a third time. And so now what a lot of people are thinking is, if market comes back up here and shows me signs of reversal, I'm selling, because this is a very strong level of resistance or a ceiling. And just like Mario Kart, when Mario hits his head on the top of that brick, what happens? He falls down. So that's what a lot of traders are thinking. So they're going to sell in this area, and then their stop loss is going to be above these highs, right? Well, what happens? Market comes back up in here, and it takes out all of those stop losses, as we can see, and then market reverses. And we probably had a lot of other traders on smaller time frames see that this was a break, so they're waiting for the retest. Here's that candle, right? Here's your doji, the candle that you're looking for, because it broke, retested, shows momentum slowing down or whatever it may be. And so we're going to buy right here, because it broke and retested, and our stop loss is below here or here or here, and we're going to buy this to the moon. And then what happens? Market falls, right? Break, retest, little bit of a push, and then it falls. Sure, this strategy may look very nice when you spot trades like these happening or anything else on other time frames. When it does work, it's very rare, and the markets are just so unpredictable that if you're guessing that when the market is starting to respect a floor, and you're like, okay, here's a floor, I'm gonna buy here the next time it comes up, and then this happens, you are now guessing in the markets. And when you guess in the markets, you are gambling in the markets, because you have no idea what's actually going on. You don't understand how the markets are moving. It's not that these markets respect these certain levels, and then, if this is a ceiling, it has to reject. And if it breaks, it needs to retest. A lot of traders are fooled into this, and a lot of people trade this way, and it's called the retail way, right? You trade as a retail trader, because these types of trading examples are so easy to find in any YouTube video and in any Forex mentor, because it's so easy to teach. I mean, all you have to do is find a really strong ceiling. If it breaks and it retests, then you buy. Or let's find another example where if it's a ceiling, if it rejects multiple times, you're going to sell and your stop loss above the high. And look, it worked perfectly, but not this time, So support and resistance, I would highly stay away from, because the markets don't respond to magical areas where the market reverses. There's way more behind that. It's not just because there's a magical fairy that's telling the market to stop right here, and it needs to respect this area at this price level, and if it breaks, it's going to do the same thing. No. Again, when you understand who is really in control of these markets, you will also understand that these are the same people who are creating these retail patterns, these highs, these resistances, these supports, right? So, last example, a lot of people would probably see this. They would think that this is a very good floor because price rejected once, twice, your stop loss would be below the low. We get here, it takes you out, it engulfs, and then it's gone. right? So this would just be another way, I would say, to look at the markets. It's definitely something I would not advise you to do. So trading support and resistance, not a fan of it. I would not be looking forward, or I'm just not a fan of it. So if you guys found this helpful, make sure to subscribe so you can see the rest of the videos. And if you're brand new to this, I highly advise to continue to watching these videos so you can see what and how we trade, so that way you don't have to trade the retail way. Part 3 coming tomorrow. I'll see you guys then.